Welcome back to the Afternoon Constitutional. Marc Smith from Red Wave Investments checking in after the Our business is in, and jobless claims were up this month. I think it was 16,000 jobless claim increase in the last report, or maybe higher than that. Let me get the exact number here, Mark.
Yeah, I think it was 16,000 on the week, and I mean that's a number that comes out every week and is often relatively volatile, kind of from week to week. And people generally focus on the 4-week rolling average on that thing, which obviously would have bumped up a little bit, but we're still down in that 350,000 new claims, which is generally not a horrible place to be.
Well, and yet still we see numbers of underemployment and claims on SNAP. We're getting upwards of 70% on food stamps now. We're getting higher and higher numbers on that. Still not great, because that limits the number of people who can kind of plant those seeds like you do for them at Red Wave Investments to save for retirement, and leaving them little chance of anything except hoping the government creates single payer everythings.
Yeah, and it is, I think it's counterintuitive, and I'm not sure necessarily what drives it, but you have seen, as you alluded to, a sharp increase in the SNAP program over the last several years, and you would think that would run opposite to unemployment. So we've seen the unemployment rate drop a lot, and yet we're continuing to see more and more people end up on food stamps, and I think there's multiple reasons for that, but it does hurt the economy when you have people that could be productive citizens and productive workers taking themselves out or somehow not being able to partake in the economy and contribute economic value to the country as a whole.
Now the S&P and all yet chugging along up another 50 points, seemingly ambivalent. Has it come completely untethered from any other economic status, and it's just sort of a little isolated bubble there in Lower Manhattan?
Well, I'm not sure it's an isolated bubble, and I think that we did see the S&P 500 hit an all-time high today, which is the first time it's done that since 2007. The Dow has been hitting all-time highs relatively frequently over the last 2 weeks, but today they both established all-time highs. And I think part of it was today is the last day of the month, it's the last trading day of the quarter. It's been a very good quarter for stocks in general, and I think there was just a lot of positive sentiment. There was the GDP data for the fourth quarter of last year was revised up. I mean, still an underwhelming 0.4% annualized rate, but higher than what was previously reported. And I think what we're seeing, and we've kind of talked about this over the last week, is how there's a lot of good economic data. Then we see some bad economic data, like this jobless claim number today wasn't overly positive. Consumer confidence was lower this month than expected. And yet companies are still generating profits. Corporations, across the board, we're kind of talking record profits or close to record profits, and I think that's really what's fueling part of the stock market move. And then, quite frankly, you have a situation with the Federal Reserve where interest rates are so low, savings account rates are so low that it's pushing people into the stock market.
I heard a phrase, and I was preparing for an interview that we're going to have for Freedom and Prosperity Radio, our weekend show, with Professor Kotlikoff of Boston University, talking about economics, and he's got a new book, a couple of new books out, and we were talking, I was just prepping with him, and he used the phrase Wall Street bubble. Is that a real thing? That we've had our housing bubble, we've had our tech bubble. Are we looking at a Wall Street bubble?
I don't think that we are, and I think if you look at the way you want to think about stock prices and even the overall value of the market is how much you're paying as a multiple of earnings of these companies. And if you go back to the 2000-2001 tech bubble range, a lot of these companies were trading at 50, 100 time earnings. And some of these companies didn't even have earnings and were trading at extreme evaluations. And right now, we're not at a level where valuations are significantly stretched. I mean, the S&P 500 probably trades around 18 price to earnings multiple, which is, maybe a little bit higher than the historical average, but not crazy overvaluation. So I think that we've seen a run-up, and it's been a sharp climb over the last few years. It's been a very good, 2 to 3 or 3.5 year period in the stock market. And yet we're still right back at levels that we saw in 2007, and yet earnings are significantly higher now than they were 5 years ago. So I think that calling it a bubble at this point is is a stretch.
I guess his point to me was that there is a smaller population of people contributing that larger amount of money. I guess was kind of what it was getting at, and I guess that ties back into some of the entitlements. As we're talking to Marc Smith on our EntitlementsDestroyLives.com hotline, and thanks to our newest and one of our dearest sponsors, and thank Jim and all the folks at EntitlementsDestroyLives.com. Go there, find out more about it. But I mean, that is kind of the thing I guess he was getting at, is that larger amount of money investing in Wall Street is coming from a smaller percentage of the population.
I think that's possible, but I also think, you have a lot of people that are investing, a lot of just regular individuals investing in 401ks, IRAs, and pension funds are enormous investors in the marketplace, and that's funding the retirements of many people that are on pensions, both public and private sector pensions. And so I do think that there's probably been some shift, and maybe we have seen the investing pool shrink somewhat, but it's not something that I think is necessarily a disturbing trend at this point.
All right. Well, so what are you putting people into the Easter weekend to see their portfolio kind of quiet over the holiday weekend, Good Friday at all?
Yeah, I just kind of enjoyed the update today. Not a lot of portfolio movement heading into the end of the quarter. I still think we've talked about healthcare a lot, but still a sector I like broadly. And I'm just kind of I just kind of held steady today and enjoyed the up move.
Well, I tell you, we talk about the business world, and this is just a neat story that ties into not necessarily investing, but the Darden School is incorporated obviously as a graduate program, but they took a class into jail to work on business acumen with inmates. And they brought the Darden School of Business into the Dilwyn Correctional Center and started to try to teach entrepreneurship and try to break that cycle of recidivism, because I guess some of these guys and gals in jail, they don't think that they can do anything on their own, so they just wind up kind of following along, and maybe breaking that cycle is such a bad thing, is it, Mark?
I think that's a great thing, and there was actually a great article on Yahoo Finance yesterday about this. I think she's 28 years old now, but at the time she was 22-year-old community college dropout living in Southern California, and she started this company selling vintage clothing on eBay. And now she's the fastest-growing retailer in the country. She's got sales of well over $100 million a year, has her own brand. And I think it really spoke to me is the fact that there still is amazing opportunity in this economy, and anybody from any background can, with hard work, a lot of hard work, a little bit of luck, and perseverance, people can still do a lot of great things. So programs like this, to me, sound like an amazing thing, and the kind of thing that we need more of.
Well, and I agree with you on that. And certainly you mentioned the Internet, and that's why I don't want the government getting their grubby mitts on the Internet, because not only is it a place for First Amendment freedoms and sort of the truest freedom of the printing press, but it's also a great place for people to start up a business without having to worry about all of the costs that used to dog startup businesses of physical plant, getting the capital together for a year or two's worth of rent while you're first developing a customer base and all of that. You can kind of do that without the brick and mortar on the Internet, and I don't want to see that squashed either, but it's a great story. I appreciate that, Mark. Thanks.
All right, thanks, Joe. Have a good Easter weekend.